So one of the most common mistakes I see traders making, and this is gonna sound crazy, but it's true, is that when they analyze fundamentals, they just simply focus on stuff that's not relevant. Now let me put it this way. How do you know exactly which economic numbers are going to be important, for the market direction? Because there's a lot of stuff out there. So do you look at whether it's labeled as high impact or low impact on whatever calendar you're using? So red folder, yellow folder, on whatever calendar you're using? Well, no. That's exactly how you get trapped into looking at the wrong stuff. The effective way to look at fundamentals is completely different. Now I'm going to take a snippet from The Real Fundamental Analysis, which is a book guide that in a specific section goes well into details on this matter. And you can find a link about that in the description below. Now, if it matters for the central bank, it matters for the markets. When you look at the exact data that the central bank is looking at, you can have the inside read of what they will do next. Example, it's FOMC rate decision day, and we're looking for clues as to what the Fed is looking at to decide their next move. Now, during the press conference, a journalist asked Powell the exact question, and he basically replies that the key focus for them is on whether inflation is coming down or not. That's what they want to know to decide whether they start cutting rates or not. So with that in mind, what are you going to look at to decide what the Fed does next? Building permits, export data? No. Look at inflation. That's the exact metric that will move the needle for what the central bank will do next. Now, that's just a little small snippet, but you can see what's going on there. If it matters for the central bank, it matters for the markets. Now, if you know a little bit about fundamentals, you know that what the central bank does shapes trends and direction across the board. And if you don't know that, we have a good bunch of videos on that. Now, it's evident that the data that matters, meaning the data that starts and sets trends in the market, is the specific numbers that the respective central bank is looking at. Now, if the Fed chair says that to decide when to start cutting rates, they need to see inflation progressing further toward the 2% target, what do you think is going to be the data that really sets and dictates trends and sentiments on the dollar? Inflation, of course, because that's the piece of data that will decide what the central bank does next. And that expectation creates trends in the market. That's in simple how fundamental analysis works. Expectations move the market. And to be precise, really, here we're talking about identifying the exact economic number, the category of that economic number, that are more likely to start trends. Because there's a big difference there, There's a big difference between the data that just creates directionless volatility, so moves that run out of fuel and fade back to pre-event levels, so they spike in one direction and then fade back, and then spike in the other direction and fade back to pre-event levels, and moves instead that run for days and weeks that creates trends that you can position for. Now, understanding that direction obviously allows you to first avoiding getting trapped in the false moves, and also getting some good trades going, in the direction of the macro context. Now, is this all theory? Well, of course not. We trade this exact stuff. For instance, through 2022 and 2023, inflation has been at the forefront of every single Fed debate. Now, just to give you some perspective, at the September FOMC rate decision in 2019, the word inflation can be found mentioned like 18 times, while instead in 2022, at the September meeting, the word inflation can be found 81 times. Now that's quite a difference there. Inflation was quite at the centers of the Fed's focus in 2022 and 2023. As a result of that was the exact economic indicator. Inflation as a category was the exact type of data that started a lot of meaningful trends for the dollar. And again, not just hindsight theory. Here's a trade we took in the public Telegram channel in that exact fundamental context. This is a practical, actionable, and useful fundamental knowledge to give you context and confidence in your journey. Because think about it. If you had some knowledge of that CPI print in the example, knowing what it meant for the sentiment, knowing what it meant for the Fed, and translating that into a bearish dollar bias, wouldn't that help you make the right trades? It absolutely would. Now the question to address here is why that CPI actually started a trend in your USD. Now, if you paid attention to the video so far, you know the answer. It's because it was the exact piece of data that the Fed was looking at to decide what to do with their interest rate. So by inflation coming higher than expected, the market started to shift towards a more hawkish sentiment for the Fed. In this case, hawkish meant more rate hikes expected from the Fed. That's where the difference is made in fundamental analysis. If you focus on random data, if you just look at the color of the folders on your calendar, on your economic calendar, you're just going to get chopped out in random moves. But if you focus on the exact data that the central bank is looking at, that's when you catch the right trends. That's when you know, okay, this specific move should continue. This specific data matters for this trend, and the trend should continue or the trend should reverse. In other words, you have to know the data that matters. And what's the data that matters? It's what the central bank is looking at. So focus on that specific type of data. That's how to analyze Forex fundamentals correctly. It's not about keeping track of all sorts of economic indicators, all sorts of data, everything. No. It's about lasering down to the exact metrics that the central banks is looking at, because that's what shapes their decisions and that's what moves markets. That's the effective way.